Hey guys, Stoney here, and I'm going to go down through a breakdown of a trade that I took yesterday and I closed today. I haven't really recorded a lot of my trades, so I'm trying to work into that. So if you guys like it, please like the video, maybe subscribe to the channel, and maybe tell some other people about it. We might get some traction here on growing this account. So here we have EU structure. We're currently in a bearish daily structure stemming back from this kickback over here. We're in a bullish 4-hour structure that actually has just, I would say, swapped recently. But coming into this trade, we were looking for a bullish call from this level that was created on this drop. So as I go down to a lower time frame, and we'll try to understand what's happening here. So what we have here is we're trapped in between a 4-hour supply and demand. So our demand is going to be down here, supply up here. You can just think of it as support and resistance. So we're trapped between this range, and then we created this double bottom pattern here to move up on. This pattern was drawn based on these levels over here. So we can take a line maybe, and I could just kind of show you my thought process. So this was broken, this was broken, this was a 4-hour supply. It broke through, and then it came back and retested here. That is the point of this level, and that's what I have it drawn here for. So I was anticipating a bounce from this level based on the fact that it hadn't been touched before. We broke through here. You might have had a small retest in this area, as you can see with this bearish candle. But for the most part, we really didn't have a retest here. If you guys follow bank knowledge or you trade bank knowledge, you know that levels need to be retested. So that was the move I was looking for. It was a very bearish market, so I did wait for additional confirmation. But I saw my trick and I moved on in. So let's break it down. On the lower time frame picture, we are looking at the 15-minute time frame right now. So you get a little double bottom here, but this isn't necessarily the picture I'm looking at. I'm digging down on the 1-minute time frame, and on the 1-minute time frame, I'm going to see what I look for when I enter. So as soon as we come into this trade, first of all, we check the 1 hour and make sure we have no impulse levels blocking us. Our only impulse level I had already marked out, and the impulse level was created when we pushed down, probably a bounce from this level here. So when this level was broken, pull it on over, we had a touch here, touch here, touch here, broken demand becomes supply, comes up, retests it here, and breaks down. So naturally, we know this is the only level that's really going to get in our way, and our target will always be the next level of liquidity, which is up here. So we take this trade, and this is how we enter. We go down to our 1-minute time frame. So on the 1-minute time frame, we watch price action. I'm just going to go ahead and brighten up the trade I did take. I left it here just so we would have a compassing point to find it from without me having to pull down stats. So we come down, and I'm just going to fast forward to the point in which we got into the trade. This is obviously the 1-minute time frame, as I've said. So we break down in this lower range. This lower range is marked out by some candlestick anatomy that I had pulled from these past touches. So back in that level that we anticipated before on like the 1 hour time frame, when we said that's where we get our numbers from, which would be these levels over here. That's where I got this level of, that's a second shade brighter of purple. That's just not going to dig into candlestick anatomy. I'm just going to dig into how we took this trade. That's why this level is painted. As you can see, it was reacted here, but did not give me any confirmation from this point on. Very bearish, we're moving down. It's nothing that we really want to take. So as I wait for price to range a bit, range inside the area that I think we're going to get a reversal from. As you can see, we got a range here, and I took my entry at this breakout right here. I took this breakout. We had a double bottom, which anybody who follows any technical analysis can see that pretty clear. And then when we got a double bottom, we also got a head and shoulders pattern. So the head and shoulders pattern was just extra confirmation that we can enter the trade, and we can, move on to get positive. So when I took the trade, I took it on the engulfing. So I have it marked here, but I took it on this engulfing of this candle. My stop I have set pretty wide. We obviously want to get it below here, and we want to get wide enough to avoid overshoots. So that's why it's down here. We don't want it too wide because this is another area of interest. So if it broke through here, we obviously know that this is going to be touched. It's only wide enough to account for maybe spread that you might see in the bottom 1.5 pips, and to account for overshoots of this range here. And the range I'm talking about is, I can highlight it, is right here. As you can see, it's reacting to the top of this zone very well, and it's reacting here. I also entered on a break of that range. So you can call it multiple confirmations, but the head and shoulders pattern was really a taker for me, and the added benefit of the double bottom was actually a play as well. So when I take my trades, I set my targets, I set my stops, and I just look for a point on which I can get risk-free. Usually the point I can get risk-free is counterintuitive to my stop. So I check how long my stop is. So we have a 17 pip range about here for our stop loss. So we're looking for at least 17 pips before we take profit. So I'm gonna go ahead and mark that off here. And I usually set an alarm, but we're not gonna do that obviously. So I'm gonna set a line. So that is the area we need to get to. Take a look to the left, make sure it's achievable, it's within range. Obviously, if we break past here, we're probably bound to get to here based on the way candles motivate. And obviously from that level, we're bound to get to where I stopped out. So I thought it was a pretty good area, not stopped out. We're bound to get to the level where I took my profit for the trade. So let me get rid of this and I'll leave that all highlighted. So I'm just gonna jump to the 15-minute time frame so I can give you guys a picture of what my target looks like. So my target's gonna be at the top of this range, obviously. I usually take trades from supply to demand or from demand to supply. I usually try not to do pip counts. Just a little heads up for you guys. If you take pip count trades, please, please, please avoid doing that. I understand, you know, it's an easy metric of measurement, but banks don't give a shit about where your pips are sitting at. They care about levels and price. So if you take pip count trades, you're setting yourself short because in a busy market, your stops are going to be wide. And if your stops are wide, it may induce you to not take the trade. But a volatile market with wide stops is wide targets. You just need to anticipate where the move's going to end up based on chart time, back testing, and what you've learned. So we move on to the trade. Here's our little antics that we use to enter. Here's our risk-free platform. So I'm going to slow it down a bit and just kind of give a little update on what I think is happening. So we had a little sideways movement coming into New York Open is where we kind of got our signifying that the market was probably going to turn around. Now, this is my outlook on the market. I can't say what your mentor says or what another mentor says, but at 9:30, we came down and we touched the lowest point here and we rejected. So that again was a confirmation for me. So it showed me that New York volume wasn't going to push below. On other pairs, it did push below because pairs kind of joined together. You can see what's happening on one and it kind of gives you an idea what's happening on all of them. And other pairs were very bearish and fell through levels that were being held up where this pair held where it was. As those other pairs fell down to demand, everything launched at the same time. The other pairs would fall through to maybe a level like this and pop up. EU held here, held a base, showing that the market was being propped by buyers, you know, another confirmation for me. When price reached here, I obviously took my risk-free stop and I got rid of the trade. When I get to this point, I do not watch the trade anymore. I only watch to see maybe if we hit our target and anticipated points. So I would watch the trade here to anticipate that we break this level, and I would watch the trade here to anticipate we break this level. My target is just shallow into the 4-hour zone because this is about where I think price will reverse. I did anticipate this trade to get hit today, and as you can see from the length of it, it took more than 1 day. So this trade, I was inside for 1 day, 18 hours, 45 minutes. It ran almost a 5-to-1, a 4.4, but I did take partials, so that 4.4 turns more into like 3, I would say. So my RR was 3 with partials that made me risk-free. So let me just dig in a little bit on that. When I told you guys I went to this level and partialed out, when I partialed out, I sold half my position. So say you have 1 lot, I'm floating half a lot left, and I've secured 1 lot at 1 RR, which means if I was aiming to lose, let's say, you know, on a 1 lot, that'd be $178. So if I was aiming to lose $178, I'm aiming to make $178. So if I sold half my position here, I sold half of the total position that I was willing to risk. So I didn't necessarily bank 178. I banked half of that. But if it goes back and stops me out, I'm going to lose the exact same half and end out break even. So if price goes down and hits my stop loss, it's BE. So once this trade is risk-free, it's BE anywhere down here. So once that happens, I'm not necessarily watching the trade. I'm looking for my RR to hit because this is what my analysis says is going to happen, or I'm looking for a break-even trade. So I'm just going to go ahead and speed our chart up until we hit that level. This trade was very back and forth, but you know, no fear because we're not watching it. At this point, it is 3:30 in the morning, London Open. I am not trading London Open right now. I'm usually trading New York crossover, and I usually don't wake up unless I have alarms. And I had this trade going as well as another trade active. So I really wasn't watching the market. I was more so, you know, getting a good night's sleep, knowing I could wake up to profits and trade New York. So I get up somewhere around 5. So when I got up, my trade was pushing up to here. I can break down the lower time frames for you to show you that this level was just passed through. So even if I was awake to watch it, there was nothing here to tell me that this trade wasn't going to get taken. So that level was busted straight through. Another level we are watching is this level. So if we go to the 15-minute time frame and just speed up until we hit that level, so you don't see me skipping through the 1 minute. I'm going to go real slow so we hit it, and we're going to continue on. Now, this might scare you guys out of the market, but remember, this is the level we're watching. This is an overshoot. This is an overshoot. Did you see some scenario where price broke the level, retested, and continued? No, we didn't see that, so there should be no fear on staying in the trade, because that is what we need to see in order for these floors to break. So price maintained the level multiple times. We did come back and tap it here, but at this point I was risk-free at about this place. So I'm not watching it. Not only that, my bias is saying that this zone's not going to break. So even if we retested back to here and floated around the zone a little bit, broke out, retested, came back, it doesn't matter to me because I'm risk-free on the trade, for one. And two, until price has pushed down below my stop, my bias is still active. So I don't have to worry about that. So just fast forwarding to the 60, just so I can get this trade cleaned up and show you guys a little analysis. When we broke up to this point, I was just waking up. So I woke up about at, I would say 4 o'clock, 4:30. So about at this point. So we were working up here as I was making my coffee. Once we're at this point, there's nothing to worry about. You guys got to remember that if price was going to reject inside this large area of 30 pips, which mind you is half of my trade, there has to be a reason for it. So if you look left and you don't see anything that's going to indicate you that price is going to reverse, there should be no fear. And as you can see, we had a very clean path. So really only resistance we really had to worry about was, say, the break of these levels. It's going to go to a higher time frame. You really shouldn't be marking things off in the 15. Break of these levels maybe. As you can see, it did act as supply and block price down, but this level was held. So really what you could have been watching is price maintaining in this area, not breaking. And if it does break, overshooting back in. We shouldn't have to worry about anything besides that. And that's just using your analysis as you would use if you were entering the trade. That should not change the way you trade. So going to the 1 minute, we obviously hit our target, smashed it to be honest. We kind of flew up there pretty quick after London, because London was over here. So once London pushed us through there, it was kind of a done deal. We could have got a retest, and honestly, there was a move here. You could have taken a trade here if you were awake and active. I was, but I didn't have to really worry about it because I was already in my position. I wasn't going to double down. That for me, I don't really try to do that because, you know, you could take away the profits that were already made. So that trade was one. And as an added bonus, I'm going to show you a second trade. So I'm going to go ahead and get rid of this one. I'm going to go to the 60. Now I'm at the 60 because this is where we need to reanalyze our positions. So as you can see, it broke here, created resistance. This resistance created a new high, or I'm sorry, demand. And this demand created a new high. So we're going to continue to keep this zone. This zone is a lower time frame zone, just a 1 hour zone. And it usually acts as an impulse level or an area that's broken to create a move. So for me, if I was trading it, I'd look for a bounce maybe in a bullish market taking me up, or I'd look for a sell as it's broken through. So when price hit this zone, it also tapped what I call my sniper zone, which is the zone where I think I can get the best RR and the best reversal odds. Now, this wasn't a big move. I'd already taken a big win today on this move, being a 4-to-1. So I'm going to go ahead and make this trade a little bit more visible. And this was a trade I took, a simple 3.6 pip stop, 10 pip target, but granted it was a 3-to-1 trade, which is what you want. So on this trade, as you can see, price went up. It tapped this area. And then if we continue on, it came back and it went up and it tapped it again. So the area I'm talking about is this little bit of price we touched here. What pushed us to this level? What pushed us to this level for me was this low. So this low pushed us to this level, and that's what pushed us up. Broke right through, retested. So right now we already have one retest showing that there's a valid amount of sellers here pushing price down. Now that wasn't enough for me. We did not go deep enough into this level for me to be convinced we're going to turn around after this bullish run that happened the day of. So if we keep watching, we saw a second retouch, which happened here. We didn't quite make it. So again, I'm not looking for a trade. If I'm looking for a trade, I want an exact retest and I want, you know, certifiable proof that I'm safe. So after it retested again, we printed a bearish candle showing another rejection. You know, it could definitely push back in. We get our next candle, we get a bearish closure. I took the trade here. So drag this down a little bit. I took the trade somewhere in this candle while it was forming. I saw it push below the low of the wick here. So I figured we were going to have a continuation. Sometimes, maybe it's just me, I think about lower time frames in 1 minute. So I'm on the 1 minute, I'm thinking right here on maybe the 32nd, we broke down and then we came up and then we broke out, we retested it, and then we continued down. So in my head, I saw some kind of transition there and I pulled the trigger on a scalp. On the scalp I pulled, my target, because I'm always activating and, you know, resetting my trades and seeing what I'm going to do. My target was to get down to this broken level. So I already had a zone kind of drawn here, because this is our 1 hour zone. So minus this candle that's already formed, because you can know the trade already won. It's based on this candle, and you could actually make it a little bit higher if you want to and base it on these wicks. But I try to do the close of this rejection for the bottom, and for the top, we have 2 taps right here that work for me thin enough that I think price will reach it. So not a long trade, not gonna, you know, go into theatrics on it. Obviously it pushed down. So that's a 3-to-1. So if you look at that, 2.5-to-1, no partials in this trade. I don't partial scalps. And obviously the trade we took here was a 4-to-1. So that's how I do it. And that's how we made some money today. If you guys have any questions, concerns, comment, you can hit me up on Stony Financial, which is my Instagram, or you can message me on YouTube. I don't necessarily know how their platform works too much, but I'm going to dig into it. Thanks guys. And I hope that you learned something here, and any questions, of course, I can help you out. Y'all have a good day, and happy trade next week.